Tech. Web3 made easy every day. Learn, explore the simple way.
You're watching Totes Tech. Smash that like button, subscribe, and ring the bell for the latest in Web3, Polkadot, Bitcoin, and Ethereum. Leave a comment to join the conversation, and be sure to share this video to spread the future of tech. Ever wonder what it takes to thrive in the wild world of crypto? It's not just about algorithms or market charts, it's about grit, street smarts, and learning to take a punch. This isn't a straight-line journey. It's a looping scatterplot of chaos, resilience, and hard-won lessons. Long before digital assets, finance pulsed on Wall Street's open outcry floors. Traders shouted, waved, and navigated pure chaos. This environment, where plans were made to be broken, was a crucible for resilience. It was a world where every second counted, and mistakes were costly. This analog frenzy taught adaptability, a skill more vital than ever in today's coded precision of blockchain. The noise may be gone, but the need for resilience remains. Mike Tyson's legendary quote perfectly captures the essence of finance. The real test isn't in planning, but in recovering from unexpected blows. Markets rarely move in straight lines. Investment philosophy, whether traditional or blockchain, must be shaped by experience. Cryptocurrency history is littered with failed plans. Survivors are those who can take a punch and keep moving forward. Growing up in Brooklyn, resilience wasn't a concept. It was daily life. Lessons from neighborhood bar fights and streetwise negotiations proved invaluable. Toughness isn't avoiding hits, but getting back up. This mindset became crucial in the unpredictable digital asset world. Setbacks are inevitable, and change is the only constant. Brooklyn taught the ultimate lesson: adapt or be left behind. The 2008 financial crisis was a defining moment. After years in capital markets, portfolios plummeted 10 to 20%. This fragility inspired blockchain's creation. Bitcoin's Genesis block, mined in 2009, directly referenced bank bailouts. It forever linked blockchain's impact to the lessons of 2008. This crisis wasn't just a financial event, it was a catalyst for a new era. Switching from Wall Street to blockchain wasn't a movie scene, it was a gritty, uncertain journey. With family and mortgages, each pivot brought new challenges. Investing in blockchain is rarely straightforward. Failure and improvisation are constants. The only way to improve is by absorbing a few hits. This path demands courage, not just capital. Before blockchain, the Greeks mastered secret-keeping with the skytail. A message written on parchment wrapped around a baton could only be read with an identical baton. This was ancient encryption. It taught lessons in selective access, trust, and information value. This historical milestone inspired Saitale's founders. They saw its relevance for modern digital asset management. Saitale drew inspiration from the skytail's principles. Discretion, security, and selective sharing are vital in today's fast-paced digital world. Not every opportunity is visible to everyone. True value often lies beneath the surface. It's accessible only to those with the right tools and knowledge. This philosophy guides their investment in blockchain. In the crowded crypto world, hype is everywhere. But real investment edge isn't about chasing trends. It's earned through algorithmic rigor, a proven track record, and authentic networks. Saitale's approach is to vet, source, and crucially say no to projects. They avoid hype, even when the market is buzzing. Their edge is built on discernment, not just buzzwords. Saitale's origin story is rooted in cross-disciplinary expertise. Founders from banking and tech met in Vienna. Their combined experience and networks offered a unique lens. Early investments included Polkadot, Energy Web, and Ocean Protocol. These were chosen for substance, not just popularity. This careful selection process defines their strategy. Saitale's strength comes from blending academic history with modern finance. Their team navigates both technical and financial aspects of blockchain. This diverse background is key. This cross-pollination echoes ancient cryptographers. They relied on partnerships and creative problem-solving. It's about seeing the full picture, not just one piece. Just as the skytail required trust, successful digital asset management depends on strong partnerships. It means looking beyond the obvious. Discernment is the real edge. Saitale's journey from Vienna to Berlin shows that valuable insights come from unexpected intersections. History, technology, and human connection all play a part. Trust in the Polkadot ecosystem isn't built in a vacuum. It's forged in cultural collisions and friendly arguments. One investor's journey from Brooklyn to Vienna taught empathy and resilience. It was a crash course in choosing the right partners. In a hype-driven sector, these personal lessons are invaluable. They shape how you navigate the market. Growing up in Brooklyn, confrontation was common. Moving to peaceful Vienna was a stark contrast. This shift sharpened empathy and forced adaptation. Resilience isn't just taking punches, it's knowing when to avoid them. This cultural blend created a unique perspective. It's about understanding diverse approaches. Disagreements, whether in a Brooklyn bar or a boardroom, can be productive. Friction often leads to stronger, more resilient teams. Plans change in Web3. Only those who adapt and recover thrive. A friendly argument can reveal deeper insights. It's a test of both ideas and relationships. After co-founding a wealth management company, the investor learned a tough truth. You could be friends, or you could be business partners, but sometimes you can't do both. Not all relationships survive startup stress. When personal and professional lines blur, difficult choices emerge. This lesson is crucial for any entrepreneur. It defines the boundaries of collaboration. In crypto, chance meetings can change everything. Dinners in Vienna led to connections with Ed Hesse and Gavin Wood. These weren't just social, they were foundational. They led to early involvement in Polkadot's private sale. In emerging blockchain projects, credible networks often matter more than technical skills. The right dinner can open doors. With crypto full of bold promises, vetting founders became essential. The investor blended Brooklyn skepticism with Viennese diplomacy. He looked past hype. Focusing on character, track record, and how founders handled pressure was key. It's like sizing up an ally in a street fight or a business deal. Trust is paramount. Despite high stakes, humor proved invaluable. Sometimes, startup teams resemble Brooklyn bar brawls, he laughed. Unpredictability, clashing egos, constant pivots. It's all part of the journey. The ability to laugh, adapt, and build trust sets successful Polkadot ecosystem investments apart. It's the human element that binds teams together. The blockchain space is full of visionaries. They believe technical excellence will triumph. But a seasoned investor knows better. No, of course not. Decades of financial experience show the most elegant solution rarely dominates. Network effects, timing, and market perception often shape winners. Technical merit isn't the sole factor. Polkadot's governance model is a bold experiment. Managing a treasury and upgrading without hard forks is a leap forward. Yet, there's room for improvement. The concept of on-chain governance is strong, but evolving. The Polkadot Fund's second round expanded ecosystem exposure. This highlights ongoing evolution. Blockchain's impact is undeniable, but mainstream adoption is slow. Early crypto was driven by speculation, not sustainable value. There needs to be some sort of store of value or value creation. This shift from hype to utility is ongoing. Real-world inertia, regulations, user education, entrenched interests, slows even innovative tech. Potential needs practical application. Bitcoin's journey is a case study in tension. Born from 2008's ashes, it promised an exit state. Yet, as its price soared, it integrated into mainstream finance. Some argue it's been hijacked by the system. Ironically, its value might be lower if it stayed an outsider. Idealists became wealthy system players. The crypto market's evolution shows speculation has limits. Long-term success demands value creation. Products, services, or protocols must solve real problems. They need to generate sustainable returns. As the sector matures, investors seek robust governance and clear use cases. Pragmatism drives lasting success. The coded evolution of digital asset investment is a philosophical tug-of-war. Idealists push for decentralized utopias. Pragmatists focus on adoption and integration. The best tech doesn't always win, but the best positioned tech often does. This balance defines the future of blockchain. Every digital asset journey tests resilience. The 2008 crisis was a historical milestone. It reminded us of systemic fragility, paving the way for Bitcoin. For those on the front lines, crashes were gut checks. They shaped careers and families. These moments define true adaptability. Imagine running a startup with young children and a mortgage. No steady income, living off savings. This was the reality for early blockchain entrepreneurs. The personal stakes were high. Startups rarely pay out early. This path demands immense personal sacrifice and belief. The 2008 crash was a masterclass in risk. Portfolios down 10 to 20%, panic everywhere. This experience forged a new mindset. Resilience isn't innate. It's forged in tough cycles. I learned a lot by managing a company from nothing. This difficult experience shaped future decisions. It's a constant reminder of market volatility. Sometimes, the hardest pivot isn't failure. It's realizing business partnerships and friendships don't mix. After growth, a founder faced a crossroads: friends or partners. This is the price of adaptation. Recognizing when to step away, even from something working, to protect what matters most. It's a deeply personal decision. The leap from Wall Street to blockchain often meant living off savings, betting on a vision when few others saw potential. Peers recognized his edge: asset management and fund setup. In digital asset management, edge is credibility, discipline, and spotting opportunity. It's about seeing beyond the immediate risk. Behind every pivot is a human story. Grappling with payroll, ending partnerships, starting over. These moments forge resilience. They define successful blockchain investors. As Naval Ravikant says, technology is what is responsible for the improvement of the human condition. But the human journey is messy. Amid chaos, self-education was a lifeline. Long commutes filled with Tim Ferriss, Naval Ravikant. These tech thinkers shaped philosophies. Podcasts offered frameworks for adaptation. They helped navigate unpredictable blockchain market growth. Learning never stops, even on the go. It's a continuous quest for knowledge. Traditional investing preaches diversification. Don't put all eggs in one basket. But in digital asset management, rules are reimagined. The Citadel Polkadot Ecosystem Fund challenges this. It focuses almost exclusively on Polkadot. This isn't traditional diversification. It's a deep dive into a specific ecosystem. The Citadel Fund's portfolio seems to defy diversification. 6 blockchain investments, mostly Polkadot. Yet, managers argue it is diversified. They diversify by project type, technology, and use case within blockchain. Polkadot is so performant that I don't think it's that much of an issue. It's a focused approach. Even diversified blockchain funds operate in a hyper-niche sector. DeFi, NFTs, Layer 1 protocols. The entire asset class is new, volatile, and interconnected. The Citadel Fund's investments are tied to the broader blockchain narrative, specifically to Polkadot's unique network. It's a specialized form of diversification. Why go all in on Polkadot? It's about technology and mandate. Polkadot's interoperability, developer community, and parachain model are compelling. The Citadel Fund has a clear mandate from the Web3 Foundation. Invest in projects strengthening the Polkadot network. It's strategic alignment, not just preference. Being all in on Polkadot is like trusting one dairy farm for the best ice cream. The fund's mandate channels resources into one ecosystem. It bets on long-term growth. This approach seems risky. But for early-stage blockchain investing, network and principal-based diversification are practical. It's about strategic focus. In emerging tech funds, diversification means something new. Less about owning everything, more about understanding networks, technology, and collaboration. The Citadel Fund highlights this shift. It diversifies by project types within Polkadot, not traditional asset classes. Investors must rethink diversified in this evolving world. The rules are still being written. From Wall Street chaos to blockchain code, digital asset investment is more than numbers. It's about resilience, adaptability, and finding meaning in the madness. Blockchain's impact isn't just tech, it's human grit. Personal resilience is still the best investment strategy. Whether dodging punches or weathering crashes, Your ability to adapt sets you apart. Every challenge is a lesson, not a loss. Networks, not fleeting trends, drive lasting value. Attention is value, but sustained attention from a strong community truly matters. Successful projects build relationships and foster trust. Continuous learning is lifeblood. Lessons come from odd places: a bar debate, a failed startup, a late-night forum. Melding street smarts, global perspective, and self-improvement makes blockchain investment thrive. Technology's promise is human. Blockchain challenges us to improve through adversity. Every setback is a chance to grow stronger, wiser, and more connected. Plans rarely survive reality. The market will surprise you. Protocols will break. Communities will shift. What matters is how you respond, how you learn, adapt, and find meaning in the madness. If you explained your blockchain journey to your childhood self in Brooklyn, what would you say? Maybe the bar fights, market crashes, friendships, and failures. The real value isn't coins or code. It's resilience, relationships, and relentless curiosity. That's blockchain's true impact. Looking to earn rewards with decentralized finance? We recommend checking out hydration.net, a next-generation platform that makes decentralized finance easier and more rewarding. If your account is not attached to a referrer, you are missing out. Add a referrer, and you will receive 10% cash back on your own Omnipool trades. Use our referral code today, HFWM14F. Hey everyone, thanks for watching Totes Tech. If you liked this video, give it a thumbs up, hit subscribe, and tap the bell so you never miss what's next in Web3, Polkadot, Bitcoin, and Ethereum. Drop your thoughts in the comments below, and don't forget to share this video with a friend who loves innovation. The content provided on Totes Tech is for informational and educational purposes only. Nothing in this video should be considered financial, investment, or legal advice. Always do your own research and consult with a qualified professional before making any investment decisions. All investments involve risk, and you are solely responsible for your own choices.
Stay with Polkadot, the future's bright. Streets connected day and night. Innovation takes its flight. Web3 powered, shining light.